and welcome. You are watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show where we answer your stock-specific queries and top stock market advisors give you the advice live on this show. So in case you're also having some doubts about the stocks that you already are holding on into your portfolio or you want to buy a fresh, do write into us. What is the easiest way to get through to us? This is the WhatsApp number that's flashing on your screens. Send in your question along with your name, your location and your contact details so that we can dial you back and include you live on this show, Daily Calls as well. Alternatively, you can also use social media platform, the YouTube channel where you're watching this show. Send in your questions in the comment section and I will take those questions too. Along with this, follow Business Today Television across the board on social media, on Twitter, Facebook, LinkedIn and Instagram, and across those platforms you can continue to send in your questions as well. Before we get started on the questions for the day today, we will start off with the top headlines we are tracking for you this hour. Markets fall in trade today. India wicks up almost 15% at 21.5 levels. The volatility index has almost risen 28% in the past 5 days and has doubled in the last 15 days odd. Sensex is now down over 700 points while the Nifty is below 21,850 odd levels. Action continues on the IPO space. Indegene makes a stellar market debut, lists at 46% premium at 659 rupees against the issue price of 452 rupees. Shares of Tata Motors have slipped 9%, marking their biggest single-day drop since February of 2022. The management sees margin risks for Jaguar Land Rover or weakening product mix. General elections in India have crossed the halfway mark. It's the fourth phase of polling that's begun today for 96 seats across 10 states. Warm welcome to all of you viewers who are joining us live on Daily Calls. Time to welcome our guest on the show as well. Mr. G. Chokalingam joins in. He's the founder and the MD at Economics Research. Warm welcome to you, sir, too. Thank you so much for taking the time out. And this is a special edition where we address people's queries, viewers' queries on specific stocks as well. And we do require, expert advice such as yours who've been tracking the markets for over 2 decades, 2.5 decades odd. And wise words from you will really help all our viewers, especially at a time like this when the markets are extremely volatile in trade. First up, before I take all those questions, I will ask from you on India Wicks, the way it has been jumping. I think it's nearly doubled in the last 15 odd trading sessions. It was 10 at odd levels about 15 sessions back, and right now it's trading at around 20, 21 odd levels. How do you foresee, what does this indicate for this market?
No, basically, volatility increased because there is a little fear in the market, particularly after FIs are selling continuously. I mean, I have not seen in the recent days, not even a single day, there were the net buyers. Yes. So according to me, that is what the reason. Of course, the FIs normally don't invest heavily on the eve of election. If my memory is right, in the last 2 decades, they always wait for the formation of the government and then they don't mind paying even 5% premium instead of buying before election. That has been their style of investment largely. So they are not likely to come back before June 5th or 6th. So the weakness may continue, and that is why this volatility has increased. And the second reason is that a lot of small and mid-cap stocks, they are trading at anywhere 40 to 80 PE. Therefore, what is happening is that now this season is coinciding with the results. Surprisingly, maybe 1/3, 1/4 of the small and mid caps are really fulfilling the investors' expectation in terms of the profit growth vis-a-vis their P multiple on the market. But more than half or nearly two-thirds of the small and mid-cap stocks, when you see the results, if profit growth is around 20%, the PE is around 40, 50. That is basically the P ratio is 2-3 times more than the profit growth, which is not giving any comfort to vast majority of the investors. And because of these reasons, you see a lot of volatility with downward bias. And
Sure.
I think it would continue till June 5th or 6th.
Okay, sir. So already a lot of questions have started to pour in for us on our YouTube platform. KD Pradhan, Ritu Jaiswal, they're all starting to write, but we also have live callers with us. So first we'll take the live calls. The first caller with us is from Bengaluru. Mohan has dialed in. Good afternoon, Mohan. How are you?
Hello, Sakshi. Good afternoon. I am your regular watcher. How are you doing?
I'm very well. Thank you for watching this show regularly. Tell us, how can we help you today? What is the stock that you're holding?
Yes. Yeah, two questions in that. Chokalingam sir, I am your big fan. Love your experience and your views on fundamental analysis. I even follow you always. My question is on the two stocks. One is the Titan, which I hold around 20 stocks. I buy on a SIP type. So now I am sitting on 5% profit. I can hold it for long. So I need your views here. And second is Tata Motors. Actually, the results are not as bad as it is taking a fall. So is it? I hold around 50 stocks. It was a bulk buy I did. Again, I am sitting on 100% profit there because last 18 months is the very good run up it has given. So do you advise me to hold Tata Motors also for long? These two are my questions.
Very good questions, Mohan, and we'll try to help you as much as we can. Chokalingam sir, you're a big fan there. He's been following you and your advice in the markets. On Titan, sitting on 5% of profit has been accumulating in an SIP mode. What is the way forward for Titan after the earnings? Do you still see enough and more opportunities to make profits on this one? Today, the stock is, of course, down by 1%, and the next one will be on Tata Motors. We'll take it as it comes. Let's first hear your views on Titan, sir.
Yeah. As far as Titan is concerned, I don't think it's going to be a wealth creating stock. The days of wealth creation is over because market has already rewarded, the P range of anywhere from 60 to 70. Whereas the company is not able to grow, as per the market expectation, its profit growth is a little disappointing now. So therefore, the P multiple should continue to contract for Titan, but still it would be a good defensive stock. So if he's a long-term investor, he can hold. Even if he is not a long-term, but if he's a conservative investor, definitely he can hold a large cap stock like this. But again, I just want to tell you that my views are only research views. The investors can take their own investment advice. Mine is not investment advisory. This is based on the research. And coming to Tata Motors, it has done very well, no doubt about it. I think it is in price. So more or less similar logic would apply for Tata Motor. If investors are conservative and long-term investor, even Tata Motors can be held. Otherwise, in terms of research perspective, it's a good sell at the current price.
Good sell at the current price in case you have a short term horizon, and as it is, you are sitting on 100% kind of profit. But the question as far as the results are concerned, after this we've seen the brokerage houses are clearly divided on this one too, and the management, when they talk about some concerns on the JLR portfolio, which was the one sole reason which has actually been one of the biggest reasons for the outperformance of Tata Motors over the last 1.5 years odd, Mr. Chokalingam. Do you see concerns there, or do you see just this as like a short term concern and things will be back on track?
See, the company has no doubt about it. The market also rewarded. The problem, is that if auto sector and metals, if you see last 5 to 20 years, the wealth creation now been linear all the time, because both are highly cyclical in nature. So I would say that when company has rewarded, such a phenomenal way, not only automobile stock like Tata Motor, even metal stocks, that's a time to book profit and preserve your wealth. And again, Tata Motor still has a lot of dependence on European economy, where the economic growth is still struggling to touch 1%. So therefore, I would say that based on all these fundamental parameters, Tata Motor is a good sell at this price.
Okay, understood. So I hope that answers your question, Mohan. On both Titan and Tata Motors, Mr. Chokalingam has given his views. We'll start taking some of the YouTube queries as well. Mr. KD Pradhan has written, and he wants to know on Kalyan Jewelers. He wants to know why is the stock moving down irrespective of good results, and what will be the target till this Diwali. You're right, Mr. Pradhan, the stock has been facing pressure, but if we actually draw a long-term chart for you, maybe you will be able to understand why is this dip coming in as well. Let's look at Kalyan Jewelers last 1 year kind of a performance. Remember, the stock has actually slipped today 2.5% odd after the earnings, but in the last 1 year, look at the kind of returns that we've got. It's 275% kind of a return that we've seen on this one. So it's a multi-bagger kind of a return. Mr. Chokalingam, your own sense on Kalyan Jewelers within the gold jewelry space, do you still see despite the earnings coming in well, the performance continuing?
Oh, definitely, the stock has done very well on stock market and also in the business front. Now, if I look at the consolidated profit and the EPS, it's about 6 rupees for the current year. For sorry, FY24, 6 rupees is the EPS, and you are getting the stock at around the 66 PE. So my surprise is different. Why the stock? People are not taking profit out of the stock. You know, a company with just about 6 rupee PE and trading at 40, giving 66 multiple, and also the stock has multiplied in the last 2 years phenomenally. I think this is a good time to take wealth based on the fundamentals.
Okay, Mr. Pradhan, in case you already are holding on, good level to exit at this point in time after the recent rally. But would you advise any fresh buys? No. Or would you have any other stock to give as an alternative, sir, in the jewelry space?
Most jewelry companies are trading at exorbitant valuation along with the gold, and the gold doesn't have any fundamental. It is driven only by the speculation. It's only by speculation and investment demand. I don't think the gold will continue to do well. Let us not forget the fact that really for 3 decades, same gold has underperformed severely. So, the downturn also should come. So, instead of buying in jewelry space, if at all somebody is convinced, he can put money in something like a geofinance, fairly large cap, more than 1 lakh crore market cap. And stock has corrected in this last 1 week meltdown. And I believe most dependable wealth creating stock for medium to long term. So therefore, that is a stock I would suggest instead of recommending any stock from a jewelry phase.
Okay, understood. So, Mr. Pradhan, it's always better to look at those stocks which can actually provide you much better opportunities to make profits, and Geo Finance is a preferred pick that Mr. Chokalingam suggests at this point in time for the long term, which can actually turn out to be a good player for your portfolio as well. We'll take another one from our YouTube viewers, and this is from Ritu Jaiswal. Now, what Ritu wants to know is that some of the sectors which have stopped, which are heavily growing sectors. Ritu, we are not able to understand what are the question that you really have. So, mention any particular sectors if you really want to know about some of the sectors. She wants to know of some of the heavily growing sectors and also want to know on the sectors which have stopped growing laggards. Difficult to understand your question, Ritu. Could you mention any specific sectors? But meanwhile, I understand from Mr. Chokalingam where exactly sectorally is he bullish and where is he bearish on. Maybe that can give you a better idea as of now. Sir, we've seen the underperformance thus far in the recent run up in the markets coming from a few sectors. FMCG, IT space, private banking space has been a laggard, if we say so to speak. Pharma space. Maybe these are the key sectors which have actually underperformed the recent run up in the markets. What is your view on those vis-a-vis the outperformance which has come in, say, from a defense or a PSU name, those kind of sectors? How would you be positioned afresh in this current setup of the markets in these two underperforming and outperforming spaces?
Interesting question. Now, you have underperforming stocks and outperforming stocks. The problem with the many retail investors is that they go overboard on outperforming and they punish underperforming sector because one thing that everybody has to remember the fact that the fundamental valuation is function of both the performance of the business and also the stock price. Now, if you look at FMCG, yes, they have severely underperformed, but the market also has already punished them royally. Now you see Hindustan Unilever close to 52-week low. So therefore, I would say that underperformance on the market or underperformance of the business is only the past. You have to see both in relative terms and then take a call. So therefore, if you do that, I would still prefer stocks like ITC in FMCG and also to some extent Nestle. These are the two stocks in FMCG. Nestle done better, but ITC also in the long term it has done well. But in the very short term, it has corrected from 490 to 432 level. I expect the hotel stock to be allotted in the current fiscal. And my personal belief is that the company may also finally unlock value from the IT company it holds, and that IT company is doing some acquisition as well. So there is a lot of opportunity to create wealth through IT company as well, apart from hotel. Now, outperforming, if you see, yes, in banking space, PSU banks have done phenomenally well. But if you look at their price to adjusted book value, in the bear market, they used to trade at 0.5, 0.7 times price to adjusted book value. They used to be trading at a discount. Now, most of these banks are trading at 1.5 times to even 2.5 times. I don't think this kind of valuation can sustain for very long. So anything trading at 2.5 times, one should sell in the public sector banks. And private sector banks, yes, HDFC Bank has failed as compared to the whole market or banking sector. So therefore, it's in price. The pain is in price. And therefore, this is a good stock to buy, HDFC Bank. And valuation multiple has come down a lot. And also the Kotak Bank that has underperformed and more because of the recent regulatory guidelines, restrictions rather. But let us not forget the fact that it has got huge number of 100% subsidiaries, and among all, only one they have proposed to unlock value, that is from the general insurance, and there is a lot of money to be unlocked from life insurance, broking business, and AMC. I believe this is a good opportunity. So this is about banking, and any other sector you want me to answer?
No, we've answered most of these sectors, sir. We do have some more questions, so we'll take down some of those questions as well. From our YouTube, see, a lot of our viewers get stuck in penny stocks, sir. So we are getting such questions as well, and I would advise, I would want you to advise our viewers at this point in time as to how to avoid getting enticed with such penny stocks as well. Nanu Vyas has a question on Vikas Eco. He bought this stock at 4 rupees 13 paisa, and he wants to know if there is any news. Now, Nanu, just look at the kind of stock performance that you have seen on this stock and the kind of chart structure you have, the kind of highs and the lows that you've been seeing. Mr. Chokalingam, could you advise on how should one be really looking at such penny stocks?
Yeah. It is very unfortunate, I would say very boldly, that only 5 to 10% of the investors make a phenomenal wealth in the equity market. In my experience, I may be wrong, it is in my environment. 90% of the people make money, I'm not saying, but don't make a big wealth, because once in a while, these kind of penny stocks get into their portfolio, it destroys. I mean, it is very easy to avoid wealth destructions. 5-6 pointers I will give if they follow, and they don't have to invest a lot of money to buy any research product. BSE gives everything. BSE gives everything. My dependence on BSE website is 90% for my own research. And last 3 decades, hardly I met any management personally. And therefore, what I would suggest is that you look at a BSE last 10-20 year price data. If there is a trend of stock going to 200, coming to 5 rupee, then going to 100, coming to 3 rupee, be cautious. Now, point number 2, if company keeps changing the names regularly, and whichever themes play out on the stock market and they change the name to suit that sector or theme, be cautious. And third, look at the balance sheet. If a debt is a percentage of sales, 200-300%, 400%, be cautious unless it is a reputed infrastructure company. 4, receivable and inventory. If it is to put together, if it is more than 50% of the sales, unless Again, it is a business nature like sugar industry. Be very cautious. And these are the 4, 5, and then promoter holding. If promoter holding is 0 or 5%, 10% in the small cap and penny cap, because there are institutional companies like HDFC Bank, there is also promoter stake 0. But in penny stocks, if promoter holding is 5%, 10%, 20, 30, anything less than particularly 20 to 30%, to be cautious. These are the few things if you follow, I mean, definitely you can avoid losing money. You know, there are some small cap company, penny companies, they declare dividend. There is a history of not fulfilling that obligations. So there are many cases, and there are some companies call it as a green energy, renewable, and then the stock come crashing 70, 80%. So one more reason, one more fact which they should keep in mind, not only changing the name to suit the theme, suddenly the revenue goes up. There are companies which had a less than 10 crore revenue, they become 1,000 crore company in a bull market like this. So see, very simple, see the results and see whether it is mainly because of the trading. Sales would be 1,000 crore, then purchase of goods traded will be 990 crore, 950 crore, then they will boost the profit. So these are the 6, 7 parameters. If somebody checks, you can avoid wealth destruction. The money you are pouring in the market, you can use it for your own family members' well-being. And it is very important because lastly, I have done personally some analysis in the last 10 years. The companies suspended from the exchanges, they destroyed, couple of lakh crore, and 95% of them are from small cap and penny stock, and 95% of them had whatever characteristics I have mentioned now, they had those. So if you can avoid wealth destruction. And let me tell you, it's nothing new. There is no match for Indian equity market to create wealth in the medium to long term. Everybody should come, but he should not get fooled and misled. So these are the parameters. Definitely will help you.
Absolutely. Nanu Vyas, I would really urge you to listen to this bite all over again. There are several tips that Mr. Chokalingam has shared on how to really select a stock. Look at a penny stock and look at all these parameters for warning signs, if any, red flags, if any, to avoid such getting into such traps in the markets as well. There are enough and more opportunities. Indian markets are giving you plethora of opportunities to make money every day on Market Today, and on our various shows we discuss with guests and we tell you some of the stocks that you can look at. So listen to that advice and only then invest. Even in this show right now, if you go back and see, Mr. Chokalingam has given his views on Jio Finance, on several other stocks that he is positive on as well. Mr. Chokalingam, stand by with us. I'll now before we take more questions, I'm now going to go across to my colleague Chetan Bhutani right there, because India will reportedly sign an agreement with Iran to manage the strategic Chabahar port for the next 10 years. And this is the first time that India could be taking over the management of an overseas port as well. A pact regarding the port was earlier signed in 2016 when Prime Minister Narendra Modi had visited Iran. Chetan is with us to tell us more about the developments and what it means for India-Iran relations. Chetan, take it away.
Well, Sakshi, absolutely. In 2013, we saw India announcing the much awaited Chabahar port developments with $100 million infusion. But now the day has finally come with escalated costs. Of course, that India will now officially take over Chabahar port. Remember, this will be the first time, as you correctly pointed out, that India would be managing a global port. However, what does it mean for India? Basically, it allows India to bypass Afghanistan and Pakistan as far as the trade relations go. It allows directly an access to the international north-south trade corridor, which really means that various exchanges of goods and services can happen through Chabahar port for India and of course Iran. It will also allow India and Iran to have strategic decision making together. They'll also have military and diplomacy ties strengthening. Also exports of goods like rice and all would also be allowed. We could also in fact check, because rice was a very contentious matter with Iran. With the Chabahar port opening, I'm sure you're better judge for that, to understand what really it means for the exporters of rice and sugar commodities as well. So clearly, in all, access to the north-south trade corridor, access to bypassing Pakistan and Afghanistan officially through that trade route, and strengthening of India-Iran military and diplomacy ties are the 3 to 4 key takeaways when Sarbanand Sonowal, the shipping minister, signed the trade agreement today.
Right, Chetan. Well, thank you so much for getting us all of those updates, as we will continue to take more ideas from you as to how things are developing on that front too. Many thanks for being with us on daily calls. Let's get back to the queries then. We do have some more queries that are pouring in from our viewers. One is on Motilal Oswal Financial Services. There's a question from Ritu. She wants to know the company is going to be issuing bonus as well. Is it a good buy compared to the diversified wealth management companies that are listed on the exchanges? Good question, Ritu, because we have seen actually in the recent past the entire capital markets theme really play out very well in the markets, be it the asset management companies, be it the wealth management companies, the broking companies as well. Mr. Chokalingam, to you, how are you looking at the opportunity within this space, and within that, if you could also give your view on MOFSL?
This space has done very well, everything related to capital market because of two structural changes, massive entry of investors into the market, and India's economic growth story being fastest in the world. So therefore, the capital market intermediaries have done phenomenally well, particularly the wealth management and security firms. And most of the stocks, they have already doubled or tripled or even more. So therefore, I would say that those who bought a quality stock like Motilal Oswal, they can hold it, because even in Motilal Oswal from the bottom, it has gone up nearly 4 times, and they can hold it. If at all, one wants to buy in this space, wait for the market cycle. Obviously, once in 2, 3, 4 years, the stock market corrects significantly, and all the intermediaries start doing quite badly in relative terms, and that should be the timing to buy these stocks. Now, one should hold on to them, and for the long term, definitely, particularly the stock like Motilal Oswal.
Okay, hold for the long term. I hope that answers your question, Ritu. Vikram, Kathir, they're all writing into us on our YouTube platform. Stand by, guys, and I will be taking your questions as well. Meanwhile, we do have a live caller. Srujana from Hubli in Karnataka has called in. Srujana, good afternoon. How are you?
Yeah, I'm fine. Good afternoon, ma'am.
Tell me.
Doubt about Yes Bank, SBBL, and IRFC. Actually, I have a holding of these shares, and I'm not understanding what to do with them because all are falling at a very high rate.
Okay. Can you tell me on Yes Bank, what is your purchase price?
Pardon?
Yes Bank, what is your purchase price?
Purchase price is around 25, ma'am.
Okay. And on Tata Steel?
Tata Steel. Pardon, what is?
What is your purchase price on Tata Steel?
Tata Steel is 153.
Okay.
Actually, I'm waiting for a target of 175, but am I supposed to hold it or shall I sell? I'm not understanding right now.
Fine. Okay. Yes Bank and Tata Steel. 2 questions from Srujana, sir. Yes Bank, she has actually taken an entry at a higher level. So how would you advise on this one? And of course, on Tata Steel, she's bought it at 153 odd levels.
Tata Steel is a good sell. In fact, I would give sell call on entire, ferrous and non-ferrous metals, because stock market is cyclical, metal space also cyclical. The convergence of these two cycles at a peak is a big warning for shareholders of metal stocks. If you look at last 30, 40 years history, invariably that's what happened. Even if you see last 1 year, 5 times aluminum prices corrected badly and then recovered. So cyclical, so one should sell metal stocks at the peak of the bull run in the market. And as far as Yes Bank is concerned, yes, the stock is down 32% from the peak. I looked at the fundamental post the results. It has done reasonably well on profit front, advance front, deposit front, and therefore it's a good hold, or one can even buy for medium to long term. It's a good stock to buy for long term.
Good stock to buy for long term? Okay. Yes Bank, you can continue to hold, but Tata Steel, Srujana, you can sell at these levels at this point in time, and in fact look at some better opportunities that Mr. Chokalingam has been highlighting throughout the show. And where all he has given a positive view, you can look at those questions too. Next, let's take a YouTube question. This is from Vikram. And he wants to know, can we take a fresh entry in Reliance Industries at this price? Well, Vikram, you'll be happy to know that Mr. Chokalingam is with us, and he's one of the biggest analysts who's bullish on Reliance story that I have known. And before the rally also started, before the run-up started, even before Jio Finance came in as an opportunity, he's been pretty bullish on Reliance Industries. What now, sir? And how would you advise Vikram on Reliance?
Certainly, it's a good buy now. Definitely, I mean, it's unfortunately nearly 10% it's corrected along with the market. Even today, if you see the media, there is a media speculation that they are getting into diagnostic business. You know, Reliance Industry, which was predominantly a oil and gas company, now for the first time, the profit from other than oil and gas has grown around 50% or little more than 50% of the total profit, which is a big achievement because stock market gives much higher multiple for the kind of consumer businesses the Reliance has diversified and succeeded, like retail and Geo mobile phone network. And not only that, they have taken over some of the FMCG companies, and they got big in media. So becoming, there is a conscious decision to shift the business focus towards consumer-oriented themes and sector, which is a big positive. And second, they already proven their ability in retail and Zeo that they can build a scale without any difficulty. So whichever areas they are entering, like a new energy or diagnostic or healthcare or pharma or FMCG, I am sure they will make a big marking. And you also look at the global research. The Geo Telecom has increased the net worth to almost 2 lakh crore now. And if you look at market cap to net worth of other companies, I think the Geo itself is worth more than 5 lakh crore. That is a substantial portion of Reliance market cap. So a lot of stories waiting to unfold from Reliance. So for medium to long term, even for short term, the correction is a good opportunity to buy Reliance Industry.
Okay, I hope that answers your question, Vikram, and we'll take another question. Okay, two last questions we'll be able to take, and then we have to wrap up. One is on Samvardhana Motherson. This is Kathir's question. He wants to know, is it a good time to buy that? And second question is on Tata Power, sir. Of course, this is legitimate. Why I ask you is because over the last few days after the earnings came about, there were brokerage houses reports that have been slashing the targets by half. Like from Goldman Sachs, there is this report, and that's why I want to ask you on Tata Power. Sumit wants to know, can we buy Tata Power now at 400 rupees? What would your advice be, sir, on both these stocks? Motherson, Sumi, that is Samvardhan Motherson, and Tata Power.
See, both are good companies, Tata Power and Motherson Samadvana. But if you ask me whether a good valuation to buy, my firm answer is no. So this is where a lot of investors make mistake. They don't make a distinction between good company and good valuation. I know if a good company is marketed and whatever valuation they buy and then they regret. For example, now Tata Power is already down almost 15% from the peak. So it's a great company, but one should wait. Unless it falls below 350, I won't have any comfort to buy the stock. The market has phenomenally rewarded. Same case with Motherson Samvardhana. Excellent company, but valuations are not excellent for investors to buy. So unless it comes below 100, I would not buy. Of course, those who are holding these two stocks can hold. I'm sure they must be making already profit. But for fresh buy, these are the ranges one should wait.
Fresh buy is avoided at this current levels. So I hope that addresses your question, Kathir and Sumit. Well, Mr. Chokalingam, thank you so much for giving us your time and addressing all the queries from our viewers as well. Viewers, you can continue to send in your questions even when the show has ended. We will compile all of these questions of yours and we can dial you again tomorrow at 12 and you can come back on the show and ask your questions too. Meanwhile, this is the WhatsApp number that's flashing on your screens. Do send in your questions along with your name, your contact details, your location as well, and we'll be happy to take your questions live. You can also send in your queries via audio message or a video message that could be played within the show as well. So don't forget all of those things too. Many thanks for tuning in onto this special edition, but do stay tuned on to Business Today as earnings conversations and plethora of buzz continues on the D Street. welcome. You're watching Business Today Television. I'm Sakshi Batra and it's Mother's Day. And here's wishing all the mothers and mothers to be out there a very, very happy Mother's Day. This year at Business Today Television, we aim to bring to you this special show to really help all the parents to be out there to really look at a very essential component of life. And this will be for the would-be mothers, which is maternity health insurance. Now, if you are someone who may be planning to start a family in the near future, you must definitely watch